hope you all are enjoying our 2023 Outlook webinar. Up next, we have our segment on sugar. I'd like to introduce Livia, our market intelligence coordinator, and our risk management experts that will join her today. We'll have Murilo, the head of Sugar Americas, speaking from our office in São Paulo, Vipul, based in Dubai, and part of our EMEA team, Matheus and Gabriel from our Sugar Americas group. So, hello everyone. Thanks for being here. Welcome, Livia.
Thanks, Thais. It's a pleasure to be here, sharing the room with so many experts and talking about the sugar market.
For sure, it will be amazing. Feel free to lead the way.
So, as Thais said, now we're going to go through a tour on the sugar market. And it's with great pleasure that I invite our risk management expert, Vidu Bandari, to talk about the hottest topics in Asia and Europe. Hi, Vipul. It's a pleasure to have you here.
Hey, Livia. It's my pleasure as well.
So to start this conversation, we've been hearing a lot about India on the news. It's made out the highlight over the past few months. And a lot of concerns have been rising about its sugar availability, especially for exports. So how much do you think and how much do you expect India to contribute to global trade flows?
Sure thing. So India has always been a surprise deck in the pack, and it will continue to be so because the production numbers, they vary a lot. And as of now, the consensus is between 34.3 to 36.5 million metric ton. And given that the country has already allowed exports of 6 million metric ton and a consumption of say 28 to 29 million metric ton. So if we just sum both of them, it comes out to 34 million metric ton. So if that is what is being produced and exported, then we'll have to have a look at the closing stock or the beginning stock for 2022 season, right? So if we look at them, then it becomes like very tight situation. But then our numbers are around like 35.5. And if we believe that the consumption is going to be staying at 28, a million metric ton may come out, but that is highly unlikely. Given that 2024 is an election year, so domestic prices will have to be kept in mind as well. So unlikely that there would be any further announcements for export from India.
So for India, we need to watch out production yields to get a better picture of how much they will have of availability to understand if, in fact, there could be another quota announcement anytime soon. Okay, so by now, our estimate is that it's rather difficult to have any additional quota. When we go to Thailand on Asia side still, we've been hearing a lot about the change from fresh to burnt cane. Could this change affect yields yet this season?
Yes, so Thailand is also like a tricky one because it might be changing the scenario totally. If we take the cue from Brazil, since 2007 till 2013, when the green harvesting was started in Brazil, the yield had reduced or dropped from 85 tons per hectare to 79 tons per hectare, right? That's a significant decrease in the yields. So if we see those numbers coming up for Thailand, and that would be reducing the availability of sugar from that part of the world as well. So Thailand, of course, for this year, we have the numbers which are in almost like 11.5 million metric ton. But going forward, we will have to see how the yields are reacting to the new mechanism.
Okay, so it's a long-term trend that we need to monitor, right?
Right.
So Vipul, now going to the other region, Europe, we've seen that last year with the Russian-Ukraine conflict, we had a bunch of trouble, especially regarding costs of production, refining costs, and etc. But we also expect a crop break for this season. So how do you see this crop break affecting global dynamic?
Okay, so for the Europe region, the crop break has been there, no doubt. And generally, its impacts on the export and imports, a higher demand for imports and a restriction on the exports which can come out from the region, right? So as you rightly said, the cost has been very volatile and the cost of production is higher and the domestic prices are also higher. So that way it is trying to balance it out. During the starting of the season, we had many doubts whether many of the refineries would operate or they would not operate at all because of the given of the not just the prices but the availability of the resources to start with, right? So that ways it becomes a little bit more tricky. But yes, for the overall S&D for the world market, not much of a give and take from that region. Like a million metric ton, which is expected, that should be there and should not be impacting the other S&D for the overall world market.
Oh, okay. Yeah. Okay. Yeah, that's nice. Nice to hear. So, a lot of things to watch out on the regions, both Europe and Asia. Thanks for your insights. They were very helpful, Vipul, and it's a pleasure having you here.
Thank you so much, Livia. Good luck.
Bye bye.
Bye.
And now we jump to the other side of the world with our Central America risk management expert, Gabriel Oliveira.
Hi, Livia. Happy to be here. Thank you for having me.
Glad to have you. So a lot has been discussed about Northern Hemisphere crop lateness, but little has been talked about the situation in North and Central America. Can you enlighten us with a bit of what's going on there?
Yes, absolutely. I think we could break into parts. So if we start talking about the US and Mexico, both countries are expected to produce a little bit less, and mostly due to weather conditions, right? We had different situations, different weather conditions in both, but overall, we had a production which should be slightly lower in those two countries. And if we go to Central America, we talk about Guatemala, Nicaragua, El Salvador, right? These countries should also produce a little bit less, and that's also related to weather.
Okay, so
And if we combine these main producing countries in the region, so if we take U.S., Mexico, Nicaragua, Guatemala, and El Salvador, we should have a 1.5 reduction in production,
okay, okay,
which
and
should be, yeah, please.
all that is due to weather. Then the main reason is weather. Could you explain a little bit better what are the conditions that led to this loss in volume?
Yes, absolutely. So let's start with the US, right? In the United States, we had basically drier and warmer weather, which affected sugar beet in the north, and that reduced sugar beet yields in the US. And in the south in the south we have kind of a situation that offsets that situation in the north because we had more rains, which helped in terms of productivity and yields of sugarcane in the south. So we have kind of a offset situation in the US. In Mexico, we had dry weather. Even though we had a bigger harvested area, we had dry weather, lower yields, so lower production and lower output from Mexico, right? And going down south to Central America, Guatemala and El Salvador and Nicaragua, all these countries were under a certain influence of La Nina effect, right? So what happens when we have a strong La Nina or a moderate La Nina, which we had, we usually have more rains in that region, and that excessive rains slowed the harvest procedure, and as well as we had lower luminosity. So with lower light, lower luminosity, we expect lower yields and lower sugar content, and that's what we're seeing right now. So for these countries, if we take all of them together, we expect a 1.5 reduction, which should give us a total output of 18.2 million metric tons for the
Okay.
region.
So 1.2% reduction, right? I see that we're reducing compared to the previous crop. So how does this reduction affect global trade flows?
Yeah, yeah, that's going to affect global trade flows, not in a big scale, because what usually happens is as Mexico is going to produce less, what's likely to happen is that the US is going to import more sugar from countries such as Guatemala. And that means less sugar to the global trade flow, right? So we're going to the US and not going to the global market in general. But the situation is basically we have in the region we have a 2 million metric tons surplus, and that means that these 2 million metric tons could go to the trade flows in the global market, right?
Right.
And that's probably Vipul mentioned about that. But what's going to happen is that sugar is going to have good pricing conditions, good price in the market because of lack of not so much availability of sugar from Asia. So this could supply and replace some of the sugar that's not coming out of India or Thailand.
Okay, so the drop in Central America is not going to be sufficient to make them not have a great participation on sugar trade flows. They're going to still be part of it and probably going to offset a little bit what's going on the Asia side. So
Yeah.
this insight's extremely important, extremely helpful. So thanks, Gabriel, for being here with us today.
Yeah, it was a pleasure. Thank you, Livia.
Moving to the main sugar supplier, Brazil, we count on the participation of a risk management expert, Matheus Jacques. Hi, Matheus. It's a pleasure to have you here and count on your expertise.
Hey, Livia. Hello, everyone. It's a pleasure to be here with you today.
So we know that Brazil has been to a crop break, to a partial recovery, and is bound to, partially recovery in this 22-23 crop season. But what can we expect for the coming one, the 23-24 year?
Weather has been very positive here in Brazil lately. We have seen many regions showing up improvement on their crops, and forecasts, Livia, are saying that rain should keep the pace until the new crop starts. So yes, we can expect a recovery in 23-24. And Livia, I would like to add that currently for the 23-24 crop, we estimate 595 million tons of sugarcane. But keep in mind that the range goes from 580 to 600 million tons, and it all depends on weather diversity.
Oh, okay. So weather is the big risk here, right? But when we talk about sugar production, actually, we also always talk about sugar mix. So how do you see this percentage being, and how do you see this behavior in sugar mills' decision this next crop?
Yeah. Okay, this is a tricky question, Livia, because of the many political factors that impacts on the answer. But considering all the information we have right now and today, yes, ethanol has failed to fight sugar for TRS ever since their prices lost competitiveness in the Brazilian fuel market, given the tax regime changes. But for now, recent Brazilian statements make us believe in another max sugar year, even with a surplus in the sweetener global market.
Oh, okay. So we believe in a max sugar, we believe in a recovery. What are the main risks we have on this view?
The main risk, we have two risks, right? I'll start for the first one. The main risk to this vision is a surprise in the government's position regarding the ethanol sector. If it ends up deciding in favor of the sector, we might see prices coming back up. However, the latest statements shows us that the scenario is unlikely. The second risk I want to talk about is we need to monitor the weather. So far, we believe in a recovery. However, if weather surprises with an extension of the precipitation period and excessive cloudiness, there could be a downturn.
Okay, so weather and governments are the main risk for the biggest sugar supplier in the world, Brazil. Okay,
Yeah.
So we'll monitor that closely during this year. Thanks, Matheus. It was very nice having you here.
My pleasure. Bye, everyone. Bye, Livia.
Bye-bye. Now, to wrap it all up and talk about Sugar 2023 outlook, we have Murilo Melo, our head of Sugar Americas. Hi, Murilo. It's a pleasure to have you here with us.
Hello, Livia. The pleasure is all mine. Thank you.
So we've entered a bearish market with an expected surplus. We've been discussing this with previous guests, and it would be interesting to understand why hasn't speculative positioning switched in the verge of this bearish market so far. So why are funds staying long while they usually go short in surplus or a small deficit outlook?
Yes, Livia, I think you're right. There is an expected slight bearishness, both from surplus S&D as well as surplus trade flows in 2023. But one should also consider that until very recently, we had a slight tightness in the markets due to delay starts of the crop in the northern hemispheres. And also, we do still have uncertainty coming from the Indian crop and whether eventually the Indian government will be allowing for additional exports of quotas or not. So if we add these to this picture, a supportive long-term view, because demand keeps growing year by year, and at the same time we are facing switch from India as well as Guatemala of sugar going into ethanol, And one should never forget, the most important is that there's been no new capex for expansion in the main crops. So the long-term horizon is quite supportive on the fundamentals. But we also should understand that there's a supportive macro scenario. China is coming out of COVID restrictions, and this is putting pressure as demand in most commodities should increase. Take a look on what just recently happened in iron ore, in copper, in crude oil, and that also could explain strength in sugar. If you consider additionally that the dollar index has been weakening, and the trend for the weakness in the dollar index keeps for the future, and weakening dollar, it's good for commodity prices in general, as it does increase the purchasing power parity for consuming countries, and it also increases the willingness of producers to export at a lower dollar-denominated prices for their commodities. And lately, one should not forget that inflation has been coming down, but remains at high elevated levels, and that's certainly supported for commodities on the macro picture. So I think all that could explain why the funds, despite eventually a slight fundamental bearishness, why they're comfortable having their longs on.
I see. And on your view, what are the risks that we have to this outlook, to this bearishness, in terms both of even more bearish scenario or a bullish turn around, right? What are the risks you see this year?
Yes, well, there are certainly risks both for the upside as well as the downside. There's always uncertainty on the market. On a bullish note, on a bearish note to start with, we could always think about weather going well in Brazil, boosting Brazilian crops, and also allowing for an early start of the crop, which could put pressure on the spreads as well. We could see weather going well until the end of the Indian crop, which could help to confirm a strong Indian crop production. On the bullish side, I would also point to weather disruptions, whether in current Indian and Thailand or Central's crop, as well as weather disruptions for the future Brazilian crop. And last but not least, there are big uncertainties on the market that, as mentioned, in regards to the Brazilian policy on government policy for gasoline and thus ethanol. I mean, the government is deciding whether he's going to be reinstating the taxes on gasoline or not, as well as deciding whether domestic Brazilian gasoline should be in parity to international gasoline prices. And this has important implications, as it could deteriorate the picture for ethanol margins, and also affecting sugar mix, as well as the sugar ethanol parity floor.
Okay, perfect. Yeah. So we got a lot to look at, right? We have to take measurement of weather, consider also what government's going to do. There are a bunch of risks that we need to take a look. And in this context of many risks, how do you see risk management and its importance?
Well, you're absolutely right, Livia. Risk management is very critical for commodities players in general. Commodity players, they are in general price takers. So they don't control where prices are going, and they don't control the price tag they put on their products. So in that sense, it's very important to understand the market and understand where prices are going, so you can protect your company exposure and at the same time position the company to take advantage of future price moves. Hedging through options allow the flexibility and optionality to protect the company exposure and to capture benefits of future price moves. In that sense, we, HedgePoint, we offer to sugar producers risk management products to protect the downside on prices while capturing upside prices to improve the profitability of the company. In the same way, HedgePoint, we can offer consumers and FMCG companies risk management solutions to assure a maximum purchase price at the same time that allowing the lowering price of acquisition of their goods in case price keep coming down. Or even with HedgePoint, we can also offer to traders the ability to improve the margin on acquiring goods or selling goods through option structures.
That's perfect. It's very elucidative of what we can have. And thanks so much for your patience and for being here with us, Murilo. It was really great.
It's my pleasure. Thank you for having me here.
Well, thanks for sticking with us while we took a tour on the sugar global market. But now your journey continues with Thais.
Thank you, Livia. Thank you so much for leading this discussion on sugar. And a big thank you to Murilo, Vipul, Mateus, Gabriel for their insights. I understand that we still have a lot to wait for in the sugar market, so we can have an even clearer picture during the year. It's a fundamentally bearish year. It's important to highlight that, with an expected surplus. However, weather and government still play key roles when it comes to volatility. So, an important market for us to keep a close look into it during 2023. Thank you once again.